Okay, all right, what's going on, everybody? Happy Wednesday. I'll give it a minute here for a few more people to flow in. Make sure this is working. So I thought I'd do something a little different here, do a live stream for some Q&A as well. I don't expect it to be too long. I just want to cover some of the big ticket items I'm getting a lot of questions about as it relates to the OBBB, the One Big Beautiful Bill that was passed in July, and a few other IRS updates that have come through recently. So a couple of things I want to talk about. Big one is the Treasury just announced a few weeks ago that they're ending paper checks for refunds. So that's going to be problematic for some people. And then talk about some of those provisions in the OBBB related to no taxes on tips, no taxes on overtime, and talk a little bit more about those rules, and then some of the crypto updates. So first starting with the paper check. So this was frankly a long time coming. So the Trump administration back in, I think, March, put out an executive order basically eliminating these. And so the IRS published this update in their newsroom a few weeks ago saying they're going to stop issuing refund checks to people. Again, it was a long time coming. They're inefficient, cost a lot of money to do it. And they found that there's a lot of fraud with them. People get their refund checks stolen, or they go missing, or just completely undeliverable to the taxpayer. So they're doing away with it, right? And so if we have a look at the EO that was signed back in March here, they do a little better job at outlining some of the details and the rationale for why they did that, right? So the paper-based payments here issued by the federal government, they're saying that there are unnecessary costs, delays, risks of fraud, lost payments, and the like. And so they're basically doing away with all of that starting October 1. So I think that means that if you are on extension and you're filing your 1040 now before the October 15th deadline, if you anticipated being able to get a paper refund check, that might not be possible. I don't know. I haven't tried that yet. All the ones that I've been filing, everybody just has a direct deposit of their refund. But some of these numbers were quite staggering, right? So they estimate that having to submit these things by paper costs over $650 million a year in lost money, basically, and that's just 2024 alone. So they're doing away with that now. For a lot of taxpayers, and I was kind of shocked to see this data, but they found that there's still a lot of Americans that just don't have bank accounts. They don't use the banking system in that capacity. And so I found an article from last year, which is pretty good, kind of highlighting some of these issues. They said that about 6% of Americans don't have bank accounts. So if you're watching this and you find yourself within that basket, what are your options here? So the first one, obvious answer is, well, now you're kind of forced into going ahead and getting a bank account in order to get a refund check. Maybe that's not something you want to do, but you almost have no other choice. However, they have carved out some exceptions in the EO, which there's not a lot of details yet as to how that's going to be implemented or how you would basically document that on your return. But they've got some listed down here, in section 4, right? So exceptions and accommodations for the phase out of those paper checks. So they do include in here, individuals that don't have access to banking service or electronic payments. So, if you find that you're going to be due a refund check in 2025 when you go ahead and file during the 2026 period, when you do that return, hopefully there's going to be some avenue, some additional form or schedule where you can complete, which says, hey, look, I understand that this is the standard now, but these are my circumstances, and so I really need you to just have the Treasury cut me a paper check. I don't have, a bank account that I can give you to provide direct deposit details. So hopefully there's going to be some more guidance, issued in the coming months, prior to tax season. Hopefully, with the government shutdown right now, nothing seems to be moving. So I'm not going to hold my breath, but hopefully by the end of the year, we'll get a little more clarity on that. Okay, so some crypto changes. So the IRS earlier this year released their new version of the 1099 DA. So you might have gotten a notification about this from your broker, right? Whatever platform you use to hold your crypto and trade it. They've got this new 1099 DA. Now, for users that need this information to file their tax returns, this is largely a good thing, right? It's going to create a headache for all the custodians that have to now file these forms. The one that we had before was the 1099K, which is this pretty little form here. And this thing was largely, useless in my opinion. It was totally unhelpful because this form that the exchanges were issuing, they only report gross proceeds. So all you got was basically this giant number that showed the gross amount of sales, if you will, for your crypto transactions during the year. It didn't provide any of their information on your cost basis in the transactions, when you acquired the asset and then when you sold it, so you had no idea what the holding period was. So this was largely an unhelpful form, but the exchanges had to do it anyway. So that's why, for those of you that trade crypto, you know that in addition to using this form, you really had to rely on tracking your own transactions, right? What's your basis in those, the crypto, whatever it was, whether it's Bitcoin, Ethereum, whatever you're trading. And then the exchanges were also pretty good at getting their systems up to date to track that information for you as well. Now, are you going to get, it's supposed to be one 1099 DA for every time you buy and sell the cryptocurrency. So if you're trading a lot throughout the year, you're going to get a ton of these. I don't think that's going to be the case. I think it's going to work similar to the 1099B that we get for just your regular stock trading accounts, where the broker has to submit this information to the IRS, but then they give you a much cleaner kind of consolidated 1099 where they show, what you bought, when you entered it into the position, when you exited it, so your holding period, what your cost basis is. So hopefully this won't be too much of a problem, but it is a good step in the right direction. Now, there are some transition rules. So for 2025, the exchanges are kind of off the hook in that they don't have to report a lot of the basis information. So, again, it's going to be largely not the most helpful form unless they choose to voluntarily report all that information. So you're still going to have to rely a lot on the other supplementary information that the exchange provides to you. All right, so enough about that crypto. So some of the good stuff, right? The one big beautiful bill. So this thing, again, it was passed back in July, and it was massive, right? So the text, when they initially published it, it's that, double space, really, really big margins. It was over 900 pages, and it covered a lot of material, including tax. Now that they've finally passed it, you can read it in a little more, user-friendly format, but it's still over 300 pages of material. So obviously, I'm not going to cover all of that in this one sitting. I don't want to be here for 5 hours. You guys don't want to listen to me for 5 hours either, so we're not going to do that. But some of the big ones that a lot of questions surround are these items like no tax on tips, no taxes on overtime, personal auto loan interest deduction. How is all this going to work? And am I even going to qualify for it? Right. So one of the big ones is certainly the no tax on tips. So if you are an employee and you're working in an industry that's predominantly tip-based, right? So if you're a bartender, waitress, whatever it might be, they have carved out this above-the-line exclusion where you can deduct a portion of your income and arriving at your adjusted gross income and ultimately your taxable income where you're not paying federal income taxes on it. So it's a good thing. Now, it is limited as far as the number of years, right? So this is just going to apply to the 2025 through 2028 tax years. If they decide to extend it in the future, who knows? But for now, it's only going to apply for 2025 through 2028. Again, unless something happens in the future and they decide it was a good thing and they want to go ahead and extended. So what qualifies? Well, qualified tips are voluntary cash or charged tips received from the customers or through tip sharing. And that maximum deduction is going to be $25,000. And the deduction phase outs start at $150K or $300 if you're married filing joint return. Now, this is really, really important to highlight here. And it's the same with the no tax on overtime, these modified AGI phase outs. It'll be interesting to see, how many people find that they're above those thresholds and they don't get this exclusion. And the reason why I, mention that is because I see this a lot with a lot of, what are perceived tax benefits. So, for example, I saw it all the time with the clean vehicle tax credit. So if you bought an electric vehicle, you go into the dealership and they promise you this $7,500 tax credit, effectively a refund. And so you go ahead and buy it under those circumstances. And then when you, go ahead and prepare your return, you find that, oh, well, you made, quote, too much money in the eyes of the IRS. So you don't get any of the credit or you get a reduced amount. So it's a really, it's really bad news to receive. And the same applies with a lot of things. I get clients that have the same issue with student loan interest, right? So they tell you student loan interest is deductible. It certainly is, but it's capped at $2,500. And then if your income is over certain thresholds, it's phased out until it reaches zero, and then you get no deduction whatsoever. So interesting to see what will really happen with this as far as who can qualify and how much savings they're going to get. But nevertheless, I think it is still a good thing. I think a lot of people will certainly benefit from these deductions. So looking forward to see, some tax savings coming the American taxpayers' way. So it's not a bad thing. Now, the one sticking point here is this qualified tips issue. So there's a lot of talk about kind of expanding what that is. And so what's interesting is when they define what is qualified tips, it doesn't include those automatic gratuities. So we've all seen, we've all been to a restaurant and then they say something to the effect of, well, if you've got a party over a certain size, it's an automatic 18% grab, right? Well, technically, because it's automatic and the customer has no option of basically refusing it or modifying it, that doesn't actually qualify as a tip, so it wouldn't be eligible for this exclusion. Now, again, they're trying to change that. I think that they will, or restaurants will find ways to change the language on the receipt to modify that a bit. Let the customer know that, hey, look, this is what we recommend maybe for a party this size, but you can refuse that amount and put down what you feel is appropriate, and then it would fall into that qualified tip basket. All right. Okay, so the no tax on overtime, again, another good provision as far as, helping people kind of reduce their overall income tax burden for the year, right? So if you do get paid for overtime work, so that's more than that standard 40-hour work week, you are allowed to exclude. The maximum deduction is going to be up to $12,500 of your earnings. And then again, the phase outs, $150 for single filers, $300 for joint. So again, it's still yet to be seen how much people can actually exclude and whether or not their incomes are going to be over this threshold, and they might not get any of it or they might get a reduced amount. Now, as far as how this all gets reported, there's still a lot left that has to be done. I imagine, so the first thing is always, or how's it going to get reported on the W-2? So the IRS has already said that they're not modifying the 2025 W-2, so that's set in stone. So now it's up to the employers to figure out, well, how do we get this information reported to the employee correctly so that they can accurately do the return? We need to let them know how much of their income is qualified tip income so they can calculate that exclusion. Or how much of their pay is that qualified overtime amount so they can appropriately record the deduction if they're eligible for one on their tax return. So for now, it looks like that information is going to be reported in boxes 12 and 14, which makes the most sense. And then maybe in 2026, they've got a draft version of the W-2 out now. they'll provide a little more information as far as, what those income amounts are, and then what your qualifying, tip employment type is wherever it is, that you might be working. So how the deduction gets reported on your return, very likely going to be dropped on Schedule 1 here. So Schedule 1, we have the additional income and adjustment. So this is the 2025 draft. You can see it hasn't been finalized yet. They might make some changes here. But Part 1 is where we report that additional income that needs to be added to your return. And then Part 2, we have those adjustments, or those subtractions. So certainly some of the more popular ones that we see are, HSA contributions, SEP contributions, health insurance deductions. You got your student loan interest deduction there. Now, the deduction for that overtime comp, the whatever your qualified tip income is that you're going to be excluding, likely going to be somewhere on 24. They might just tell us to put it down there in 24Zs and other adjustments. I don't know. Likely going to be there, but again, it's still very early, so no real guidance yet on where that thing is going to land. But hopefully we get some clarification, preferably before the end of the year, or definitely by the end of January. But with the speed at which the IRS moves sometimes, it's certainly a big unknown. Okay, so let me have a look at what else we got going on here. So the auto loan interest deduction, let me drop back to that on the, what page should I have that on? OBBB. Okay, so no tax on car loan interest. So this is an interesting one. Now, personal interest from a tax perspective is very often not deductible, right? When we think about what's deductible for personal interest purposes, the big ones that come to mind are your home, right? So if you've got a mortgage, your mortgage interest deduction is deductible as an itemized deduction, so you're allowed that. The student loan interest deduction, and we touched on that earlier. That's personal interest, right? It's not business related, but you can write off some of that, if your income is below certain thresholds. And then investment interest, right? So that's another itemized deduction that shows up on Schedule A. It can be used to offset other investment income. So there are some limits there. But the no tax on car loan interest or deductible auto loan interest is a new one to add to that basket. And so it's certainly going to help out some taxpayers. Now, of course, like with anything, there's a lot of catches here. So number one is what type of loan qualifies. Well, the first one is, this has to be a loan that originated after December 31, 2024. So for those of you that already had a car prior to Jan 1, 2025, and you financed it, those loans aren't grandfathered in, right? So you can't, start writing off your auto loan interest because it wasn't something that was acquired in 2025. So that's the first piece of bad news. The qualified vehicle, so it's got to be a car, minivan, SUV, pickup truck, whatever. The gross vehicle weight has to be under 14,000 pounds, which shouldn't be a problem. Most personal use vehicles are. I assume you're not buying a dump truck for personal use purposes, so 14,000 pounds shouldn't be an issue. And then the final assembly is in the U.S., right? So this was part of the Trump administration's initiative to try to encourage domestic auto manufacturers to produce cars and get people to buy them rather than buying imported vehicles made by foreign manufacturers. So if the final assembly is in the U.S., then you qualify for it. And so the dealer is, going to have to provide you this information, and confirm that it is in fact eligible for this tax deduction. Now, the really good thing, and I was surprised when they added this because normally this kind of benefit only applies to those who itemize, but they claim that this deduction is going to be available for both itemizing and non-itemizing taxpayers. Now, most taxpayers in the U.S., the overwhelming majority, do not itemize their deductions, right? You just claim the standard deduction, and then that's it. And that provides you the greatest tax write-off, the greatest benefit. So in this case, if you don't itemize and you have a qualified vehicle with the loan acquired in 2025, you're still going to be able to claim the deduction. So that's really, really good news. Okay, so yeah, I think that covers it. Again, I wanted to keep it really short in this update. What I want to do in subsequent videos and streams is we'll go through the OBBB in more detail. I'll try to cover one section in each video per stream, and then of course if there's any questions that people have, feel free to comment. If you weren't able to catch the live stream, that's fine, of course, because this is going to be recorded and it just goes into the VOD, so you can watch it later. And yeah, that covers it. I mean, I really do appreciate everybody joining in to watch, and for those of you that watch afterwards, I hope it was relatively helpful. Just a brief overview of some of these main items. And I look forward to seeing you on the future streams. Thanks, and have a good rest of your day.